Key levels and indicators to watch for the Bitcoin monthly close. It is rapidly approaching, my friends. We got like less than 6 hours, I think, before that monthly candle closes. And things today actually already developing just as I identified yesterday. So we're going to take a look at what has triggered that volatility this morning through the first part of the day and try and get some bearings on how things are going to continue to develop as we head towards the monthly close here tonight. And of course, what might follow here in the month of May. If you're new to the stream, my name's Keith Allen. I appreciate you joining me. Want to welcome everybody here, new and old, and remind you that live chat is open. If you have questions, I will do my best to answer them. If you have insights, I want to hear them. I promise you, the more you guys contribute, the more fun these are, and the more informative and the more valuable they are to all of us. So by all means, don't hesitate to do that. If you are watching on the X platform and or a recorded version of this and you can't comment in the live chat, then go ahead, leave a comment on the social media, and I will absolutely respond to those and engage with you. Game Zone, good to have you with me. And let's see where we're going to start today. Let's start on, where we should start? We should start on the economic data that obviously triggered some volatility this morning. I did tell you yesterday in a post in both the live stream, and I think I posted something last night about the economic data coming this morning that was going to be a catalyst, and could be a potential catalyst for what we have seen here today. And well, that's absolutely delivered. Let's see. Let's start by sharing the right screen for starters. Let's start right here. Here's the post on the X channel on the MI Algos page. Talked about bid support rugging yesterday at the yearly open, and another block of bids stair-stepping down that opened the door for some downside volatility heading into Wednesday's economic reports and the monthly close. And as I said yesterday, holding the yearly open would be super bullish and probably set up a nice potential short squeeze. But we've seen so many wicks this week through that yearly open that I didn't have a lot of confidence in it holding, and of course it did indeed get penetrated this morning. Price has since recovered. So we'll take a look at that. But we're also going to take a look at what's developing in the charts, what's developing in the order book, and some of the indicators that I'm using to guide me through all of this. I also wanted to, we have a sale going on Premium Plus at Material Indicators that ends tonight at midnight, 25% for all the tools that Material Indicators develops. Literally every current and future retail product release. That's Fire Charts 2.0. That's everything, all the metrics in the MI dashboard. So Fire Charts 2.0, you're probably familiar with. Lots and lots of metrics in the MI dashboard, and also our trend precognition indicators and our MTF mean reversion indicators. We're going to talk about those a little bit because I actually this morning got a new signal on MTF here. So this is mean reversion, and this thing is just a rock solid, consistent money printer. So there you go. Let's start over on the economic data for the day that came in earlier this morning. I think 8:30 Eastern time is when things started, and then we had another batch coming through at like 10 o'clock. The first round, obviously, pretty negative news, and the market responded negative. All markets responded negatively to that. The big picture was, obviously there were quite a few misses. I think the most important one was the GDP growth rate quarter over quarter. Forecasted to be 0.3%. It was negative 0.3%. Huge miss on that. And I don't think there's a whole lot of, confidence that things are going to get better anytime soon. I think the market feels like things are going to get worse before they get better. Obviously, we had, is there a bright spot in this report? I don't know, 1/100% percentage point on a mortgage rate reduction. not really significant. And I don't think that, well, I mean, when you look at the mortgage application rate, maybe that's a positive. But I think, well, listen, as somebody who is going to be moving soon, I would like to see mortgage rates come down more before I'm comfortable buying. So I'm probably, at this point, not probably, I'm not buying at this point at these rates. So that's a real world case scenario, I could tell you. We do have additional data coming out this week that could push things in the opposite direction. Tomorrow, big day, challenger job cuts, initial jobless claims, continuing jobless claims, et cetera. Those are big ones to watch. And Friday, even bigger with the non-farm payrolls and unemployment rate. Of course, as I mentioned yesterday, I really don't think the real move starts to play out until we at least get past the FOMC meeting and Fed Chair Powell's speech on Wednesday, May 7th. And then, we have this quote unquote tariff negotiation going on, and we're in this 90-day window of alleged negotiations. And, the market's looking for clarity, and simple as that. I think the consensus is that what was proposed was not sustainable. I think people realize that these are negotiation tactics. And so maybe what we end up with isn't as bad as what was initially proposed and laid out there. So we'll have to see. We'll have to see how this all plays out, and whether it's actually going to play out in this 90-day window. I would venture to say that it would be surprising for all of the countries impacted to have this locked up in 90 days. And of course, China's the big one, and that's probably going to be an ongoing process for quite some time. On to the candle chart. Let's go and take a look at how things have been developing. I'm here on the monthly chart right now. Of course, everybody always wants to know on a monthly candle, is it going to close red or is it going to close green? Considering where last month closed at 82.5, I think we're in a pretty safe zone for a green close here on tonight's monthly close. What happens after that? Okay, so I talked about some of the indicators that I'm using and that I'm looking at. And one that I look at on every close, daily, weekly, and monthly, is trend precognition. The A2 plus algo up here with the arrows, the A1 algo down here with the dots, and this beautiful A1 slope line, which actually looks right now. Let me enlarge this and see. This is relatively flat right now. Okay, so even if we don't get a signal, even if we don't get a new signal from either indicator, this will move in real time. So once the candle closes, we could see this tick upward, we could see it tick downward, or we could see it maintain this kind of flat trajectory. And what this does is gives us an indication of any momentum shifts or changes in velocity relative, basically in between signals, right? So let's say there's no signal. We can tell when things are when things are looking up and when things are looking down, and when they're looking harder down, and when they kind of pull out of those nosedives. So that's what I'll be watching here on trend precognition. I would say that a signal would be a gift here that would offer some sort of direction in an environment that is just full of FUD, FOMO, and uncertainty. On the weekly time frame, we'll look to see what the first week of the month delivers. So we'll look for a weekly close at the end of the month. But something else I want to show you on the weekly, just in terms of the overall trend, is the RSI. And we can look at that monthly as well, actually, while we're at it. So on the monthly, the RSI, as you can see, has some room, not quite in overbought territory, but ranging in that direction. Now, there have been plenty of times where, in history where price does trend above that overbought range, and it can happen for an extended period of time. I mean, if you go back to the early days, Bitcoin back in 2016, 17, before we hit 20K, there was a long time up in that range. This was just, tremendous growth. We saw the same thing happen when we got to when we worked our way into the mid-cycle top of 2021 and ultimately the top of 2021, where you can see things actually broke down. So this was really perceived by a lot of technicians to be the real top, and this was a manipulated distribution rally that got us to a new high. Is this potentially a muted version of that right here? Potentially, I guess, but we'll have to see how things play out. I happen to think that the macro is still intact, and there's more upside for Bitcoin before the end of the cycle. Could the new administration's policies break the cycle? Absolutely, they can, and we've seen him threaten that. Now, speaking of the RSI, something that I won't say I live and die by it, but I come pretty damn close, is the weekly RSI, at least for Bitcoin. And you'll notice I have a line marked here around this 41, 42 range. We'll call it 41.5K. I mean, not 41.5K, 41.5 on the weekly RSI for Bitcoin. As long as that remains defended, Bitcoin has historically been in an uptrend. And when that range is lost, when that level is lost, that's when we confirm that we're in bear markets. Well, we came close to this. In fact, we double bottomed in that range here recently in March and at the March close. And so at the moment, we're still on this trajectory upward. And I think that I'm hopeful that will hold. And, based on the data that we're seeing, we're still in in good shape. And one of the levels that we really watch here is the yearly open. Okay, you can see it here marked. I actually have that's another indicator that we watch here is our yearly and quarterly opens and closes. Those tend to be important. We're hovering above this one right now. We have more resistance up above at the 98K level, falling through this level. So as I said at the top of this wick was kind of expected because we had seen 1, 2, 3, 4 wicks in the past week, and now 5 wicks in the past week. These were not a sign of strength to me. Now, what is a sign of strength to me is the amount of technical support that we have here in this range. Really between the 21-day moving average, you see the purple 200-day and the blue 100-day all consolidated in a pretty tight range between, say, 88.5 and 90.5K. And if I go back to this chart, you'll see what else we have in that range, and that is the trend line. So this, if we break through this after tonight's close, if we break through these levels, here is, I think, a strong concentration of technical support that should hold price above the trend line. Now, what does that look like in terms of liquidity in the order book? If we head over to fire charts, we can see this was the rug pull I told you about yesterday, and that opened the door for this to happen. We had a bit of a I don't know, I would call this a attempt at liquidity herding, but it was not successful, right? So we saw this liquidity moving around. Let's go to the daily time frame and see if we can see how this really transpired. Okay, so this actually was some liquidity herding that was successful at the higher resolution. We can see a block of about 17, 18 million was placed here. It was then moved up after this got hit. This was moved up, and we saw price recover, right? Price moved up from there, and it moved from here. It moved from here and pushed price even higher until ultimately price came back down. Now, still trading right now in a comfortable zone, but not a ton of liquidity holding price up here at this point, at this moment, and not much in the way, or really anything in the way, buying, market buying at this particular moment. Ask liquidity stacking overhead. That makes it harder to penetrate. You can see the volume here on the side. And you can also hover over it and see that we have just about 10 million in this range here. That's, well, let's see, 10. Yeah. That's obviously not a ton holding things in place, but there's also not a ton, no big concentrations here until we get higher and higher up to really the 100K level. And even that isn't a ton stacked on that level. We have asks laddered through the range, but not just a huge concentration that I think is unpenetrable. I think at this point, anything is penetrable when the market is ready to do so. Let's add a little contrast to the chart and see if it makes, if anything stands out. What stands out to me is we have a heavy concentration between this 98K level and this really the current range, but 95 to 98K is pretty heavily stacked with ask liquidity that are going to be difficult to penetrate. And as I mentioned, we do have a technical resistance level up there that we need to be mindful of, and that is where we have this this quarterly. Let's see when this actually came from. This was our first week of January. And this, of course, was our yearly open. So we have the yearly opens, the quarterly opens, and the first week of. And you can see there's some significance here because the first week of actually gave us initial support, and then it turned into resistance. And as it stands, it is currently serving as resistance. Now, we haven't had a chance to go up and retest this since we broke through here. So a little consolidation here, then work our way up to this, then conceivably work through that and hopefully consolidate above 100K would be a great path. And in my opinion, a sustainable path to the next leg up. What I don't really want to see is just straight rips. Straight rips like this tend to not be sustainable without some sort of retest of support. So that's why I'm interested in seeing a support test come down. Now, if it proves that the 2025 open is going to hold, I'm okay with that. But I want to see these support tests happen at key levels. Whether this ends up actually being the key level or not remains to be seen. I just haven't seen enough strength here yet, nor enough liquidity in the order book to give me confidence that that's going to hold at this time. But things are building, right? You can see things strengthening, like this replenished. It was rugged. It was hit. It came back into place. And now we see at least some liquidity, some bid liquidity replenishing in that space, but it is not, I want to point out, it is not above the yearly open. And that yearly open is a key technical level, in my opinion, that needs to hold. So in terms of indicators, we looked at the key moving averages. All of them are important to me. The ones I look at, I have marked here: the green 21, the blue 100, the red, I'm trying to go in order here. The green 21, the red 50, the blue 100, and the purple 200 moving average. I like them on the daily. I like them on the weekly time frames. I like them across all time frames, but especially on daily and weekly, and weekly, at a macro level, more important to me. As you can see, we're holding above the 21 week at the moment, and that's an important distinction in my opinion. I told you that the MTF mean reversion indicator was also a good source, or a good resource in an environment like this. If you're looking, listen, if you're trading, if you're trading and scalping rather than building a position for a long-term hold, you've got a different approach here. And if you're trading and you're looking for dips to buy, to scalp, then this MTF mean reversion indicator is a rock solid tool that you are missing out on if you're not using it. We set our deviation from mean based on the volatility of the asset. This Bitcoin hasn't really been super volatile relative to like what say alts have been doing. So I'm running a pretty tight deviation here. This is a 1.5% from mean. Haven't had a signal here since April 10th. So I don't get a ton of signals just on Bitcoin at this deviation, but the ones I get tend to be pretty good. And so if you're using this as a scalp, then you're going to use tight deviations like this. If you're using it to DCA into a longer term hodl position, then you might want to go with deeper deviations and get bigger dips. So that's just, there's plenty of tutorials. I've got links to all of the channels in the description of the video. So if you want to go back and watch a tutorial for this, you'll find links both on the YouTube channel and on the X channel for it. We talked about RSI. We talked about the moving averages, which are really in totality, that and trend precognition are the indicators that I look at most. If you're comfortable with something like, say, itchy clouds, then you use what you're comfortable with. I use what works for me. You use what works for you. In terms of, I'll show you one other that we can look at. We talked about this one this week a few times already, and things are changing here a little bit. This is part of the MI dashboard. It's one of our global analysis tools, and this one is showing us our alts to BTC beta. And at the moment, we have low beta on the rise. Okay, and historically, what that has meant is that has led us to local tops. And the key word here is a local top, right? If you're a macro trader, do you care so much about the local top? If you're a macro investor versus a short-term trader, if you're a short-term trader, you definitely care. So what this is telling us is that price is still appreciating, but now we're seeing a reversion here in the past 24 hours, at least one beginning to develop, and this could bring high beta back up. And when we get to high beta, that's when we get to, as you can see, when things are topped out, the blue line is topped out. That's high beta, right? It's marked down here. When we get to periods of high beta, that's when local bottoms are marked. So maybe we're going to chop for a while longer. My thought is that we're going to chop through this, probably through this, whole 90-day period, but who knows? Administration is going to throw out statements that they deem necessary to keep the market in check, and all we can do is trade that to the best of our ability. You could be moved by all of the comments that move the market, or you could zoom out, look for a broader view of the market. And if you are of the thought that Bitcoin has not yet peaked, that we will once again see Bitcoin prices above 100K, then I think you know what to do, right? Bitcoin is still on sale. So now, if you're concerned, if you need that money in the short term, or you're concerned that, this whole tariff situation is going to break the economy, it's going to break the cycle, then you do what you need to do. But I'm personally trying to push fewer buttons and resist the urge to react to every single thing that serves as a short-term catalyst, because they tend to revert, pretty quickly. So that's the approach that I'm taking. Again, you got to do what works for you, but this is what works for me. I want to since I'm hovering across it, let's take a look and see what happened with ETFs yesterday. We had just a huge day on what was this on Monday. BlackRock had almost $1 billion in ETF inflows yesterday. Another 216 million that made for another net positive day. And it's been kind of a streak here: 1, 2, 3, 4, 5, 6, 7, 8 consecutive trading days, all net positive for Bitcoin ETF flows. I think I've given you a few things to marinate on here. We have, like I said, just really um, hours to go before our monthly close, and we will be watching to see if we indeed get new trend precognition signals on the monthly. That would be just an unbelievable gift, in my opinion. So I will be watching very closely for that. If we don't get any new signals up here, I'll be looking down here at the A1 slope line to see if this trajectory changes. If it points up, if it flicks its way upward, that's going to be an indication that bullish momentum is on the rise, or bearish momentum is weakening, however you choose to look at it. And if it uh, points downward from here, that's going to be an indication that bearish momentum is on the rise, at least for that time period. Okay. And with that, guys, I will leave you with a parting shot of the order book on fire charts. Don't forget, all of these tools are available on sale just until tonight at midnight. 25% off. Use promo code Alpha25. Links to it are in the description. Do not miss out on your opportunity to get the tools that are going to give you the edge to win more trades. Hope you navigate through this well and safely and profitably. The name of the game here is not to lose money. Good luck, guys. We'll talk to you again tomorrow. If I see anything major developing, I will, as always, do my best to chime in and at least post something on X to give you a heads up.